The market seems to be reacting relatively modestly. In Jackson, around Jackson, there are literally bears. You're not one of them, quite clearly. There's nothing in this report that would derail your essential thesis, which is that technology and technology companies that are going to improve productivity and increase margins are going to lead the way in the market. Correct?
Look, I know we all spend a lot of time on the macro. We spend a lot of time on the Fed policy, fiscal policy. But, there is an economy out there that's run by business people, by workers. And the reality is one of the major trends in our economy right now is a shortage of labor. We were running out of workers before the pandemic. The unemployment rate got to 3.5% in January and February of last year. And coming out of the pandemic, everybody's suddenly shocked that there's another labor shortage. Now, of course, some of these are pandemic-related issues that have kept workers from going back to work. But the labor force just isn't growing. It's growing 0.5%. And so I think companies are starting to realize that workers are scarce. You got to hug them. You got to hold them. You got to take care of them. You got to pay them more. You got to give them more benefits. And that's only going to make sense if you can increase productivity. And I think, fortunately, we have the technology tools that can augment the mental and physical productivity of workers. So it's a win-win situation the way I see it.
Hug them, hold them, pay them more. Sounds as cozy as the bears out there, the real ones. Anyway, Steve, let's get back to you for kind of a thought on this. It's also important to note that a lot of what these minutes are meant to do is kind of message the market, test the waters a little bit, right? This is all, we've had messaging from the Fed about the taper. Now the minutes kind of confirming that. And you have to imagine a kind of calm market response like this is what they're hoping for.
I think so, Kelly. But the question becomes is how cold are the minutes, right? There is a robust discussion in these minutes about whether to taper sooner rather than later. There is a defined group of doves who say, hold on, hold off. Inflation could be transitory. The Delta variant presents downside risk. Let's just wait a little bit longer. And there's a defined group of hawks in there who are saying, you know what, there's a lot of risk to inflation. Some thought it would be prudent to prepare for reducing purchases relatively soon due to the inflation risk. That's said outright in there. So the question is how things have changed over the past 3 weeks. We've reported there's been a movement, a coalescing around this September announcement with the possibility of an October and November taper. But Bob is right. We're going to learn an awful lot in Jackson Hole. He's also right, as I believe there will not be foreign participants this year because of COVID. So it's going to be an America First Jackson Hole, if you will. And we're going to focus squarely on U.S. foreign policy. And look, Powell's either going to give the green light for a September announcement or he's not.